do you think that we're going to look back and say that the Fed made a mistake cutting rates? So they were responding to weakness in the labor market primarily. But now we're seeing Atlanta Fed GDP is saying we're going to be at a 3.9% annualized rate for growth in the economy. Spending is still solid. We had upward revisions and we've got this hyperscaler spending boom. Is now the right time to be cutting rates?
So there are two things. One, level, and then two, let's talk about the growth rate for a second. On an annualized basis, you're absolutely right, quarter to quarter, but on a year-on-year basis, GDP has grown around 2%. What we talked about, historically back since the 90s when we were investors was that 2% was that tipping point, meaning that the US economy is growing, what I would say quite slow relative to history. Or I wouldn't say that it is quite nearly as dynamic as that 4% sequential growth implies. And the level of real interest rates should have some proportionality to what you think that underlying growth rate is. So we do have to struggle with what that underlying growth rate is. But when you look historically, if inflation comes in lower than we expect, and that's kind of my base case, because to me, tariffs are more deflationary than inflationary, then it means that the Fed—
Why do you think that?
Because I think that they act like a tax. So yes, the prices of some goods go up, but unless somebody gives you more money, your marginal propensity to consume, if you had to buy that tariffed washing machine, goes down. So somewhere else—
demand killers.
That's exactly right. And if you think about the underlying rate of inflation, to me, it's quite slow. So core CPI ex shelter, which we can debate if shelter is the right sort of calculation from a Fed perspective, but I think you can make a really strong argument that it's driven by a supply shock by the initial Fed hike. So if we think about sort of core ex shelter, that run rate was around 2%. So we don't really have a broad-based inflation problem, and the tariffs, even the goods we're seeing, are off of this decelerating base. So it may very well be the situation that it's not a mistake because the underlying run rate of inflation, and oh, by the way, GDP growth, is such that the Fed can pivot and can renormalize monetary policy from a situation which was too tight.